selling a put option has limited profit is the topic for this video from a viewer asking a question regarding it. The question had two different parts. We're going to address both parts in this video. Towards the end of this video, I'm going to give you a link to a playlist that I believe has 4 videos in it. When you watch all 4 of these videos, you will not only have a general idea theoretically of how to get started trading options, but you'll also understand how to set up your own stock charts in your particular brokerage. Once you have that done, I would recommend that you wait to start trading real money and trade paper money for a little while. Paper money allows you to make mistakes without actually losing money. You know, it allows you to click around on your brokerage and figure out how to actually do the transactions and things like that. You can get all the beginner mistakes out of your system without risking real money. If you like trading, if you're new to trading, you like trading, you want to learn how to use options and have those implemented into your life, then consider hovering your mouse over that subscribe button, clicking that subscribe button, because at this channel, I Have Success, it's all about trading stock options, and because stock options are a derivative of the stock market, by default, we learn a little bit about the stock market also. So let's get into this question today. SK Lee says, thanks for sharing. Can you explain how selling put would limit the profit? Yes, I can. Would that also have unlimited loss if stock goes up? No, it wouldn't. Let's get into explaining this a little bit more and talking about different aspects of this. So the first part, can you explain how selling put would limit the profit? So what happens specifically in the transaction of selling a put option? Right? When we say the put option has a limited profit, we're specifically talking about from the time the put option is sold till the expiration date. And so let's say you take in $50 for selling a put option. No matter what happens with the stock, if the stock goes up, if the stock goes down, you're not going to take in more than 50 bucks. Whatever premium you receive for selling the put option is the amount of money you will make for selling the put option. Here is a snapshot of an options chain on the put side. You see here strike price from 25 down here to 40, 41. That is different prices that the stock could be at, that you can sell options at. This bid section, this is the price that you can sell options at. In this ask section, that's the price that you can buy options at. Now there's some nuance. You could probably get filled in the middle or whatever, but for this, the context of this video, let's just go with these numbers that we see here. So let's say you decide to sell a put option with the strike price of 36. You receive 45 cents times 100, because each option contract works in 100 shares of stock. So you're going to receive $45 before any commissions or anything like that. So let's just look at 45 bucks. So you receive $45. So no matter if the stock goes up to 40 or if the stock goes down to 30, you receive 45 bucks, and that's it. And that is what is referred to as limited profit. Regardless of what the stock does, you're going to get $45 brought in. For the second part of your question, would that also have unlimited loss if the stock goes up? Right? If the stock goes up. So let's pretend this is your $36 strike price. If the stock goes up, you don't have any loss at all. Zero loss if the stock goes up. When selling a put option, there is no risk for you if the stock goes to the upside. Because what is a put option? A put option gives the buyer the right to sell stock at a certain price, and they're using it as insurance if the stock goes below. Now, if this is your $36 strike price, and instead of the stock running up, the stock goes down, that's when the risk comes in. It comes for a put option, the risk is to the downside. Now there's different ways you can deal with put options. You can do cash secured put options. You can do naked put options. You could do credit spreads. There's all these different ways. So, without having more information to talk about all the different risks, it gets to be a lot of different nuances. The safest way to do it is with cash secured put options. And right here is going to be a link to that playlist. Watch that playlist, and then you'll have a good idea theoretically. You understand how to set up some charts. It's not the be all end all of your charts, but it's going to get you started, which is really, really great. And also consider paper trading. Consider doing simulated trades to learn what you're doing. That way you're not risking real money while you're just figuring out where to click around and all these different things. And to help you in this process, go to ihavesuccess.com. Download the cash secured put stock selection guide. There's some other downloads. You can download those too. But this will help give you a mental framework of how to select a stock. Again, it's not the be all end all. Just like setting up your stock charts. There's room for you to maneuver around, but it's a basic recipe. And you can add a little bit. You can take a little bit out depending on what your taste is. But at least it'll give you a general format of how you can approach selecting a particular stock to sell the options on. With that, ladies and gentlemen, I hope you guys have a fantastic day. And if you have any questions, please leave them in the comments for me. If I don't particularly know the answer, then that's great, because then it forces me to learn also. You guys have a fantastic day. Aloha.